Good evening, everyone, and welcome to Crypto Pulse Weekly.
Good evening, Doc.
Good evening. Our weekly assessment of the markets, and today is the last run for the year, and also the last for the week. So, before I start, I'm just going to try to launch the Instagram bit. Just give me a second. I really had to squeeze out it. Nevertheless, let's get cracking. It's going to be very brief, but I believe there's some valuable takeaways from 2021, and we should be able to see some dramatic, how do I say, some dramatic developments in 2022, and that's because 2021 was supposed to be the blow off top year where the price goes insane and everything goes ballistic. But what we've seen instead is that the prices have not gone insane. Pretty much you've been having highs and lows, as it were. And as a result of that, there have been a lot of disappointment across board on, what's going to happen in 2022. But you need to realize something very basic, and that's that 2021 will go down as the official year that crypto becomes mainstream in institutions. Um, you might not see it or appreciate it now, but the amount of companies and the amount of institutions that have become involved in cryptocurrencies like Bitcoin and Ethereum in 2021 has been the highest on record. And as a matter of fact, many what you call family estates, family trusts have moved funds into crypto in 2021 with an intention to just test the waters. Let me use that word. And what has happened is a lot of them have seen, dramatic gains. I was looking at the top performing hedge funds in 2021. And as a matter of fact, the top performing hedge funds have underperformed the markets when it comes to crypto. The top performing hedge funds did less than 25%, somewhere on the average about 20%. And somebody was passing a commentary to say that it's a shame that hedge funds get the best of PhDs in investment and trading, and they could barely eke out 30% on the year when youngsters less than 20-year-old have sold NFTs for millions this year. So 2021 is that year where things go mainstream with crypto. Before 2021, the only companies that were really vocal about crypto was BlackRock, what's it called, Galaxy Digital, and probably MicroStrategy around mid last year. That was when PayPal and a couple of others decided, and PayPal and Square actually decided that they were going to start considering, including Bitcoin into their payment methods. And we saw that come into effect this year. So PayPal adopts Bitcoin, starts allowing Bitcoin. If you have PayPal now, you see a wallet section where you can buy and store Bitcoin. Same thing with Square. Twitter also created a placeholder where you can receive Bitcoin as well on the app. So we've had this cross industry adoption in 2021. And if you remember something I said, I've been here for a while, I said a statement back in, I think it must have been October or November of last year, which is October or November of 2020. And what I said then was that if the poor man misses the boat, he has missed the boat. Essentially, when you miss the boat as a poor man, you miss the boat. There's nothing you can do about it. But when the big man or the institution misses the boat, what they do is they hold the boat or they pull the boat back. And for a fact, that's what's been happening on this market. So if we didn't have so much influx of institutions that we've witnessed this year, I bet you the price of Bitcoin will probably be in 6 digits already. But because of the institutional influx, with it comes what I want to call institutional manipulation. So to give you a very good example, very good example, I'll use gold. In the early 70s, when gold started trading on the commodities market, it was easy to know that gold was in short supply because that was the reason why the US determined that they should change from gold standard to the US dollar. So because gold was in short supply relative to demand, and in fact, it was outlawed in the United States to own gold privately at the time. So because of the scarcity, the price was always going up. So to curtail the price and to ensure that the price was not going up too much, the government in cahoots with, I would say, Wall Street and probably the Feds, came up with this idea of creating the gold futures market and the gold ETF futures markets. I'm not going to go into details of what the ETFs and the futures markets do, but it suffices to say that the setup of that infrastructure is basically to provide liquidity for paper gold. What do I mean? Because you have futures, which are contracts, essentially, based on the price of gold that were being traded on major institutional exchanges. Because you have those contracts, they weren't based on physical gold and they weren't backed by physical gold. They were backed by gold futures. As a result of that, all that needed to happen was for the Fed or the government to pump as much money into the futures markets to depress the price and then provide a supply that does not exist in the underlying asset. It's a bit complex, and it's something I'll touch on in 2022 again. But basically what that did was it provided liquidity for gold where there was no gold, essentially. It's a difficult concept to absorb. I'm going to say that again, but that is why the price of gold had remained stable relatively for a very long time. Because what happens is, even though we know that, okay, there are gold supplies all over the world that can increase the supply of gold, the demand on the market for the price of gold is way more than actual gold being supplied per time. So to stem that demand, they came up with the idea of ETF, futures-backed ETF for gold. And that was a lever of some sort that allows the government to moderate the price via reverse engineering, if I may use that word, and keep the price of gold within control. Why have I given that example about the price of gold? I've given that example about the price of gold because that's exactly what has happened in 2021 to Bitcoin. So Bitcoin started the year at 28K, as you all know, and the price was blasting off through the first 3 months of the year. And that 3 months and the preceding 3 months, actually, the price had been going up. So if you take a snapshot from October up until March, the price had gone up consistently for 6 months. Now, if that price had not been tampered with, quote and unquote, at the rate at which it was going that time, probably be a 200K plus and back by now. But two things happened. One was when Michael Saylor had that conference in February of this year, where he invited about 1,000 CEOs of companies in the US and told them about the need to add Bitcoin to their balance sheets. Many of them actually went and bought Bitcoin. But what then happened was that around the month of April, a law secretly came out that was not, that news was not on the market. I actually just found it out this week. A law secretly came out that told the US institutions that if they had Bitcoin on their balance sheets, then they need to pay tax on the lowest price. I think I'm not sure that is the lowest price or the highest price of it at the end of a particular quarter, of the particular quarter that they bought it. So because of that regulation, which was quite ambiguous, to be honest, many of the institutions that would otherwise have ventured into it backed off. And because, I mean, many of them did not really know about it, like Michael Saylor did and had done their due diligence. So many of them backed off, and then followed by the China exodus, when the miners were chased away from China, and then the prices started to drop, and many of the institutions that should have gotten in backed off. But beyond that, what also happened was there were so many applications for an exchange traded funds in the United States for Bitcoin. That is Bitcoin spot, meaning those contracts will have needed to be settled in actual Bitcoins. For you to execute an exchange traded funds that is based on actual Bitcoin, you need to have the Bitcoin in custody. However, because the institutions in the US and probably the Fed does not have that much Bitcoin in custody, none, and I repeat, none of the ETF applications for spot ETF has been approved till date. And many of the applications started at the beginning of the year. In its place, what we've had is futures-based or futures-backed ETF. Futures-backed ETF is paper-backed ETF. Let me explain what it means. The futures market is a contract-based market that just speculates on the future price of a commodity. So what the futures market does is people place bets, let me use that word, on the future price of Bitcoin. And based on that bet, they have what you call options. It's an options market that deals with option expiry. And what options basically do is that they say that if the price is above, let's say if the price is above 40K by 31st of June, depending on the amount I'm putting down as my options bet, I will win the amount to the degree to which I'm leveraged. So if I put down the $10,000 for an option expiry at 40K, and I say, Bitcoin will be above 40K. What it means is that I can sell Bitcoin at above 40K on the particular date. If that comes true, then I get the opportunity to sell and I cash out. So big banks, institutions, and actually some countries take place in this market. I mean, they participate in this market. So for the most part, those options expiry sort of drive the bulk of price movements. Now, what the US regulators have tried to do is to empower the futures markets to reverse engineer the price by pricing options bets, put and call options to say, okay, the price cannot go above 60K, or the price cannot go above 50K for this time period. As long as those options expiry exist, depending on where the majority lies, usually you find the price will gravitate to where the majority lies for the option expiry, and that indirectly determines what the open price of the commodity, in this case Bitcoin, will be. So there have been several futures-backed ETF, and ETF, I mean, the futures market for Bitcoin has been open since the beginning of the end of the bull market of 2017, 2018. So now adding ETF to it has just further empowered that market, engineer the price in a way. However, that's specific to the US. However, there's a dichotomy, not a dichotomy, but there's an irony at play. And the irony is that other countries like Canada, Brazil, and Australia have approved spot-based ETF in their countries. And what we've seen this year is that even though the price of Bitcoin crashed mid-year, the Canadian ETF actually grew during those periods, meaning more people actually acquired Bitcoin during the period of the crash than when the price was booming for the ETFs that were spot-based in other countries. So what does this all mean? Well, it's simple. The United States usually, I don't want to use the word megalomania, but the bombastic nature of the United States is to try to take over the market. Unfortunately, in this case, the United States has probably just about 25% of the crypto market as it were currently. Even though we know that, I mean, United States is the money printer, so they have all the money to go around. However, because there are other countries that have already approved spot-based ETF, what this means is that the intention to reverse engineer the price cannot be for long, especially as it regards Bitcoin, because there is only a limited supply of Bitcoin. There's only 21 million Bitcoins that will ever be. Almost 19 million of those Bitcoins have already been minted. So 90% of the Bitcoin that will ever be is already in circulation. That is scarcity. And what that means is that as more people begin to get into spot ETFs in these other countries, and in the countries that will approve in 2022, the real value of Bitcoin will bubble to the surface and the scarcity will show up. As I will show in some other slides, all-time balances on exchanges have been going low and low and lower this year. The exchange balances of Bitcoin has been going lower and lower and lower throughout the year. So in overall recap, in terms of volatility, we witnessed 28K. The lowest the price got to, even at the bottom of the crash, mid-year, was 28K as well. We've peaked at 69K, and all things being equal, I think tonight we might close the year at around 46 or 45K, depending on how far or when the options expiry are. That's supposed to be options expiry today at around 5 p.m. New York time. That's around 9 p.m. local time here in London and 10 p.m. in Nigeria. So by 10 p.m., have a fair idea what the yearly close of the price of Bitcoin will be. But generally speaking, it's been a very wild swing. So from starting the year at 28K, it's done almost 3x. It didn't quite succeed in getting to 3x, but it's doubled and back. So right now, we're almost, we're probably like 70% of what it was from the low of the year and from the open of the year. From the peak, we're almost like 40-something% from the peak now. But bearing in mind that, one, many institutions have exited the market or have taken profits off the markets, either to this month or last week, or probably today when the options expiries are happening. So liquidity is very thin on the market right now. And come January, there'll be a huge influx of money, generally across board, institutional funds, funds from government and all that. So we expect that from the first month in January, we will see a lot of bullish sentiment. I mean, just on the back of the fact that most institutions will have recalibrated their books. They're starting a new year. They have fresh allocation of funds, and they're looking for where to put the funds. So, except there is some crazy variance or some bad news that happens in January. Usually, in January goes bullish as well for crypto. January 3 is because so two things can happen. I hope my internet is still on. Okay, my internet is still on. So two things can happen. One is that there is a parabolic run that starts at the beginning of the year. Two is that we start moving back to all-time high and go probably to 75 or 80K before seeing another correction. But generally speaking, I think we're at the lows that will be for a long time. Because if we close this year at 46 or 45 or 47, basically we've set the foundation for 2022. So I'll just quickly run through a couple of things I wanted to talk about today, and then I'll release you guys to go and enjoy your New Year celebrations, depending on what you do in your country. Some countries, they go to church Some countries just do countdowns, and some others go to parties. So depending on what you want to do, I'm going to make it snappy and finish within the hour. So that's what the year looks like. We started above 28K. We reached several all-time highs. We've had the longest consolidation in recent time in the price of Bitcoin. Exchange balances have been hitting all-time lows. So if you're hearing bangs in the background, it's fireworks. Fireworks are already going off here. Even though it's just 7:20 local time, 7:22. So we had new balance lows on the exchanges, and we saw that the only coins that were coming back to exchanges were actually long-term waves. We also saw the hash rate, which is the processing power, the measure of processing power on the network, plunge and go back to all-time high during this year. So the plunge from the China exodus of miners resulted in miners springing up everywhere in the West, with particular impetus in the United States. Somebody said going to church to party and do countdown. So I like to know your church. You party on New Year's Day. Okay, so we have the hash rate reaching all-time high, and even at the lowest of this year, the price has stayed above the open of the year, which was 28K. I just discovered that just looking at the charts this evening. I was like, oh, this is very significant because it foretells where we're likely to be. I think so, where we're likely to be next year. And a couple of things going into the next year. One is there's a proposed upgrade for Ethereum that makes Ethereum proof of stake. It might or might not happen, but any news that talks about it is going to make the price of Ethereum pump really hard. Secondly, there's a significant interest in altcoins, starting from Ethereum, by institutions. So many do understand, especially from an institutional point of view, that one, they missed the boat on Bitcoin. They can try to drag back the boats, but they missed the boat in terms of, the supply is not going to increase, and there's nothing they can do about that. However, for Ethereum, many organizations and institutions see an opportunity to position for Ethereum because Ethereum is basically a blockchain platform that allows you to do many things. So if you think Bitcoin is gold, many people see Ethereum as petroleum that has a lot of ubiquity in terms of usage, and as a result, they see it as a technological investment in new innovations. So on the back of that, at the minimum, I expect Ethereum to close next year at either 0.2 or 0.1 Bitcoin. It's definitely be more than 0.1 Bitcoin. So what that means is if Bitcoin gets to 300K, Ethereum will be 30K. Bitcoin gets to 200K, Ethereum will be 20K. Why am I sure about this? Very simple. If you take a look at the 2017 Bitcoin charts and take a look at this year's Ethereum charts, you see that it's almost like an exact copy and paste. It's not verbatim, but it's following the same trajectory. So that tells us that the minimum we can expect Ethereum to get to in this run is 16K. And because we did not peak this year, as I said in my last, I think that was 2 weeks ago when I was explaining charts, because we did not peak this year as expected, we've sort of dragged out the peak. So instead of the peak to be somewhere around the 100K at the minimum, it's now looking like 200 plus. I'll explain that when we get to the charts. But that's what it looks like in terms of outlook for 2022. In general news, just a few other news items I want to talk about. I saw this that Mexico is planning on central bank digital currency. You also remember that 2021 was the year that that Nigeria tried and failed at attempting a central bank digital currency. I don't want to talk about that for this session because I think it's not productive. So I'm just going to pretend as if it never happened. But we've seen a lot of CBDC pilots, and I'm just bringing this up. They're not planning to do it now. They made the announcement, but they're looking at 2 years' time, which is My 2 years time, 3 years time actually, with 2 years time tomorrow. They're looking at 2024 to roll this out. If you follow through the year, you realize that countries like Japan, the European Union, Canada, Australia, and even a few other Asian countries, I think Korea, South Korea as well, have been on a CBDC pilot since the beginning of the year. Many of those pilots will be rounding up or should have rounded up by now. And what that means is that there will be proposals of central bank digital currencies in the next 2 years. Yeah, in the next 2 year max. For obvious reasons. One, digital currency is way easier to produce than paper currency by all standards. It's cheaper for the government. It gives the government a lot more control, which is what the whole world seems to be gearing towards right now. So if you go to World Economic Forum and read their website, you understand that there's a very strong drive from unknown quarters for globalization and control. The things on those sites are very scary, but I'm not going to talk about them because it's almost like apocalyptic in its nature, especially if you read scriptures like the Bible. It's almost lining up in parallel to what they want to achieve. But I mean, those are the guys that are advising countries and country heads on economic policies. So I take whatever they write there very seriously. So I think we will see CBDCs pop up either next year or the year after on the radar of the government. It was this year that Myanmar adopted Tether as their national legal tender. And I think I talked about this 2 weeks ago. And I talked about Tether reaching all-time high around about the same time. This has very strong implications, just to explain. So a small country with a failed economy attempting to dollarize the economy digitally. So usually what most countries would do, like the Latin American countries, will be they would have a parallel run, meaning they will accept dollars, just like Nigeria does, and then they accept their local currency. Then when the local currency fails completely, they'll junk the local currency and just stick with the dollar. So what they are doing, because they don't have, it's a military government of some sort, so they don't have enough international clout. They've gone through the back door to dollarize the economy. Well, it has its pros and cons. I mean, the dollar itself is a fantastic Ponzi, but that's a discussion for another day. But it helps them to leverage because then they have a common basis, and then they're able to, carry out transactions basically on their mobile phones. Now, will they have money? Yes, they will have money. How will the treasury? Their treasury will probably be in Tether, or will be stored with Tether, or they will store treasury with Tether and probably Bitcoin or Ethereum as an offline storage of the national treasury. But watch out for these guys and for MicroStrategy. Not MicroStrategy, for El Salvador. Because El Salvador, this year was the year El Salvador adopted Bitcoin as a national legal tender. So watch out for them, because what's going to happen is that the money printing is not going to stop. Just think about it for a second. For the governments of the world, and when I say government of the world, I'm basically talking about the United States, for them to solve any political problem, they need to pump money. So if any problem comes, humanitarian crisis, war, anything, economic crisis, the ready-made solution for the government of the West is to borrow. What borrowing means to the government is that the government is printing money. It's just that it is too rude and abrupt to say it that way on the news or publicly, because then there will be chaos. So what the government does is the government addresses the issue with more money. So let's look at a funny scenario. A country like Nigeria, poor in productivity, GDP is declining year on year for the past 5 or 6 years. They need more money because they're not producing as much as they're spending. They go to places like US, for instance, and say, we want to borrow money. And the US says, yes, we'll borrow you 2 trillion, we borrow 1 trillion. Where is that money coming from? The US too is a debtor with its own debt ceiling increasing every year or every half year. So basically what the US does is credit their ledger entry with Chase New York or any of this Morgan Stanley or Goldman Sachs, and then say okay, credit the account in New York with so trillion, and then they move on to transact with that money. When that money is printed, of course, it sits in the balance of Nigeria as a debt. But what also happens is the Fed notes it that the US is the one that authorized us to borrow them that money. So the US authorized Feds to borrow them that money. That money is just being printed. And as long as you print more money into circulation, you are diluting the value of the existing supply. Now, there will be the economic argument that economists will raise and say that, but there's productivity, the economy is producing. But you ask yourself, on what basis is the economy producing? What is the calibration of the productivity of the economy? It is calibrated by GDP. But GDP itself is like a quadratic equation. You can manipulate the variables on both sides to get your answer. I'm not going to go into the details of that because I don't want to cause confusion for. But just understand that the government will continue to print money, economic and political problems. As a result, the value of cryptocurrencies will keep going up, especially things like Bitcoin. And Bitcoin being I don't want to use the reserve currency, but the index currency of the crypto world will always appreciate in value because there's limited supply and you can't increase the supply. And the supply is almost gone because 90% of the supply has already been minted. Over the next 100 years, the remaining 10% will be minted. So the value is always going to go up because it's geared to incentivize productivity, quote unquote. So the value will keep going up. And as a result of that, I expect that 2022 will close higher than 2021. Now, it's not to say that we can't witness a bear market in 2022. We could witness a bear market, but it will be after Bitcoin has probably pumped to hundreds of thousands before we see that bear market, quote unquote. There is also the thesis that we won't have the kind of bear market, and I always make reference to that we won't have the kind of bear market that we had before. I think there is a possibility it might not drop to maybe 80% lower based on this year's price. It might be 80% lower based on next year's price. But what we'll expect is at least a 2 to 4x growth in the value of the cryptocurrency markets. And as a result, on the overall, I think 2022 is going to be a greater year than 2021. Much more actually. And because institutions are going to pump money into Ethereum is going to drive altcoins. Altcoins are going to do fantastically well in 2022. So having said that, I'm going to go into the market capitalization. So even as of today, when people are still a bit shaky on where we are, we're still sitting above 2.2 trillion in overall market cap. That's quite significant. Honestly, I think that's quite significant. Even the fact that Bitcoin dominance is 40% plus. So we're looking at about 900 billion plus. So we're just short of that 1 trillion capitalization that we hit earlier on in the price of Bitcoin. I think we'll immediately go back to that probably in January. But what this tells me is that, well, if you're sitting at 2.2 trillion at the end of this year, I think that by the end of next year, I think that will probably be at least double this. And let me just I want to pull up something to corroborate my submission, and that's the market cap. Where is that market cap? Yeah. So I wanted to pull this up to corroborate my thesis. So this is all. So yeah, this is a very good one. So right now we're sitting at 2.2. In January 2021, which is here. So consider where we are in January 2021 to where we are now. The January 2021 is essentially 30% of 1/3 where we are now. Let's go to January 2020. January 2020 was essentially about 1/5, about or one fourth or 1/4 of what it was at the end of January 2020. If you go again to January 2019, you see that we had just about 100 billion growth between 2019 and 2020. If you go back again to January 2018, which was the peak of the last bull run, we were essentially at, yeah, I could say 600 or 700 or 750 billion. So the peak of the last bear market, or the last bull run, is where we were at the beginning. Look at it. Is where we were at the beginning of 2020. Where is that? Oh, sorry. At the beginning of 2021, essentially. Where we peaked in 2018 is where the market started. And you can see between where we are now and where we are at the beginning of the year, you can see a 3x growth, basically. Yeah, you can see a 3x growth. So what I'm saying is this is significantly going to go. In fact, if I was to plot this, if I were to plot this, yes, 1, 2, 3, 4, 5. Yeah, if I were to plot this on a logarithmic scale of a normal chart, end of next year, we'll see us as anywhere between 5 and 6 trillion in overall market cap. So what am I saying? Adoption is still very early. We're going to see a huge growth in crypto markets, very huge. I think that we'll get to 6 trillion, probably more in 2022, because we've seen some fireworks in 2021. And because, I mean, there'll be chaos at different points, there'll be uncertainty at different points. Dollar, then when the uncertainty settles, you need to move out of dollar. They will move into things like crypto. It's just inevitable. So that's where I see the overall crypto market going in 2022. In terms of fear and greed, here we are. We were at extreme greed 2 weeks ago. I mean, extreme fear 2 weeks ago, and now we are back at fear, which is a very good buy zone, generally speaking, because what it means is that there is risk aversion in town, and people are not ready to engage. Like somebody said, he said, if you don't buy when the market is red, there will be nothing to sell when the market is green. So it's just natural that the time when the market is most afraid, first time to actually buy. And like somebody will say, the price you see today, you might see them no more again forever. Like I'll show you again in the charts. The lows of last year, or the floor, but the ceiling of 2020 December. The ceiling of 2020 December is not as high as the no. That's I meant to say it the other way around. The floor of 2021 January is higher than the ceiling of 2020 December. Just think about that. Both in terms of the price of Bitcoin and in terms of this market capture that I was showing you earlier on that. This is January. Where is that stuff? January. Yeah, so this is January. No. So this is January 2021, which was the floor, 731, and that was December. So right now, we are here, and we are like 3x higher than where we started the year from. And like somebody said today, that we're having a discussion, friend, and he was saying that She remember when she joined and she was saying, "Oh, I feel that I'm coming so late. And people have made all the money." And it's telling her that they are still early. And looking back now, she just realized that she actually is early because started around, I think, November, December last year. So regardless of what the sentiments are, the adoption curve is growing, and what it means is that we're going to see more adoption 2022. More regulations will come in. Like for instance, I understand South Korea um are working on their what's it called? Their regulation for taxation of crypto gifting and inheritance. So because they're already thinking like, okay, people are going to want to, you know, pass this over in the future. But the good thing about this, just as a diversion, is that you know that you don't have to you don't have to go through the normal financial framework to pass down an inheritance to your family. Because over time, just looking back over the last 3 or 4 or 5 centuries, what has happened is different kingdoms, as the scripture will call them kingdoms, or different governments or civilizations have tried to usurp the authority and the ownership of individuals and consolidate them in the hands of either the ruler or the emperor or the king or the government, one way or the other. And what this does, I mean, a protocol like Bitcoin is actually to hand back ownership to the individual. Now, not everybody will want to take the full responsibility of that ownership. So not everybody will eventually custody their own Bitcoin or crypto. But it's a very significant milestone for humanity at large because what it means is that you can actually pass wealth to your down to your generation, if you will, untainted. Let me use that word. Because if you think about it this way, if somebody had $5,000 in 2000 and no, in 1913, or let's say 1940, just after the war, and says, I'm going to pass down this $5,000. Our $5,000, I mean, is probably worth 5 million or $50 million today. But if the person kept that money in the bank, of course, that money has become useless, regardless of how much it has compounded in compound interest. Its original purchasing power cannot be as much as what $5,000 could buy in 1940. However, if there was Bitcoin in 1940, just hypothetically, and the guy buys $5,000 worth, and let's say Bitcoin was, 1 cent or whatever it was then, and then there's Bitcoin now, just follow my line of logic. What it means is that that amount of money will be so powerful today because it has grown significantly in value relative to the world currencies. So what this does is that it helps to actually preserve wealth and enable it to be transferred, tarnishing its value. It's pretty much like yes, it's land, but you can't carry your land now from your village in Okrika or your village in Elisha and say you are bringing the land to London to come and sell. No, you can't do that. However, you can take your Bitcoin from here and go to Australia and can sell it 50 years later. So I think this is important just to put things in perspective for everyone that is feeling though I'm late or I wish I had thought this 20 years ago. We're still very early. And the real power of what Bitcoin has achieved is going to show up in the next 10 years. Right now, it's not really apparent. People don't understand what the real leverage is that Bitcoin provides. But when governments begin to produce central bank digital currencies that stipulate that this is how much you can spend on what, then people begin to realize that, okay, there's actually a lot of value in decentralized and secure wealth. Having said that, if I had to go back to our cheat sheets, I think we're back to optimism because the market has really slided down in terms of price action and in terms of overall valuation. But the trend is still up. Like I told one of my friends, he said, "Yeah, we hit." Like he felt we hit euphoria in May. I think that was a short-term euphoria. It's actually not the real euphoria because we never got a blow off top. This last leg is usually a blow off top, and what it means is that the price go up like vertically. You see like weeks and weeks of price go up only. That's when you know that the end has come for that cycle. And we've yet to see that. And if we don't see that, then it means the cycle keeps dragging on until we finally get to that blow off. So having said that, I'm going to technical analysis just to talk about where we are with the price of Bitcoin. So interestingly, this chart is a snapshot of one of my charts that I presented back in July when I was talking about price of Bitcoin falling around this bottom and trying to break the 30K wall and not succeeding. At that time, apparently 28K was the open for the year. So that was why the price was bouncing off so hard, 28K, because that was where the price was. Yeah. And if the price ever goes back to that kind of long-term open, naturally, institutions will buy. Imagine you are buying on a yearly basis. You bought Bitcoin at 28K. It goes up to 50 or 64K. Let's say you sold some. Then it comes back. Automatically, you buy back. And that's actually why the price get being rejected here till it eventually bounce back. And we saw new all-time highs. So let's take a look at the charts. We are back to 46K. Like I said, I expect the price to drop till what time is it now? This chart. This is 6 o'clock. So I expect another 4 hours. Either the price dropping. The price is not going to remain here. I'm going to explain that shortly. Just the price is not going to remain here because this level, which is 45.9, if I show you on the higher time frame, on the daily time frame, yeah. So this level is sitting below this short-term trend line, but more importantly, looking for must have deleted that. Must have deleted that trend line. There's a particular trend line that comes from below here. I think it comes here, all the way from here. I must have deleted it by mistake. So that trend line is a major trend line. Then the trend line in the what's it called? In the gray dashed line. I'll just squeeze the chart so you can see. This trend line comes in from April, the peak in April when the price went to all-time high at 65K. That trend line has been a very vital trend line. So the worst the price can get to tonight, 44, and as I said, 45K is the near-term targets. So every attempt to push the price down is going to end in 45 because that is where the market has sort of bounced off on a very long-term basis. If you look at, so there's something called, and I think I explained it, the general market principle, test, break, and retest. It's a general market principle for entries when you want to make market entries, and it applies across all time frames. So usually you see this trend line was the original peak. Then this was another peak in September before the price came down. So it was almost like this was the test. Let me draw a circle here to explain what I'm saying. It was almost like this was the test point of testing that trend line. And at this point, in the month of October, when we revisited it, was the break, quote unquote. And then this zone that we are right now in is the retest. A retest is usually a validation of a particular trend line, a particular price level. So from a technical standpoint, and that's why I appear to be quite confident that we're likely to close the year above here, which is 45,000. Which is 45,000 on the day, actually. So the lowest we can close the year is 45,000. I doubt we'll close at 45,000. There'll be a lot of people that will be trying to front run the market against the 1st of January. So hitting 45,000 is actually the best buying entry that will ever happen. And many people will be sitting here waiting to buy Bitcoin at this price, because what it means is that we are bouncing off again of the trend line and retesting the trend line, confirming the validity of the trend line. So if we confirm the validity of the trend line, what it means is that when this bounce occurs, this bounce will at least double. I mean, these are just basic technical principles. This bounce will double the length of the decline that we've had. So if we pick it from here and say we had this, a 53% drop from all-time high, what I'm saying to you is that when we bounce, we can expect to bounce to at least that same level, which takes us to, what's that? Takes us to, yeah, almost 100K, whenever that is. Now, that might be, a long, treacherous journey, or it might be a very massive and rapid journey that the candles just keep going up. But I can say with all confidence that when the year opens in January, we are going to start moving up. And our near-term target is sitting in this region, anywhere between 86,000 and 100K. So that's the first thing I wanted to say. The other thing I wanted to say was the S&P 500. The S&P 500 is the US index for all the companies, like the stock index, the Standard & Poor's index, but it's the stock index for the US companies. And throughout this year, S&P 500 was just not front running, but more or less leading the price of Bitcoin. So S&P 500 new all-time highs. So if you take a look at S&P 500 from the inception, and that's about, I think, 90 something. Go on there. Let me place it. Even the weekly does not do justice. Okay, monthly should be better. The S&P 500 has been going up since they had the record since 1872, apparently. But just to show you the price behavior since then, it's been going up consistently, generally speaking. But this year in particular, which is what I'm trying to narrow, this is this year. This is where we started the year. We started the year at 3702, and it's been up only for the most part. So we started the year at 3702 or 3687, and now we are almost 1,000 points ahead. Now, this market has been driving the gyrations of the Bitcoin price. So this month, you can see it's closed high, even though Bitcoin has not really closed high. But this S&P 500 and this DXY, these two indices have been driving the price of Bitcoin directly or indirectly. And I think I mentioned this earlier on, that the DXY is the US dollar versus a basket of other currencies that are trading with the US in terms of trade partners. And what I was saying was that the US DXY was in an overbought region. I said that a few weeks ago. So now the price is coming down, and you can see that the price of Bitcoin is responding adversely, because usually when the price is coming down and S&P 500 is going up, what happens is the price starts to go up. But this is going down because options expiries day. Today happens to be the end of the month, and today happens to be the end of the week for institutional traders. So as I was saying before, I expected that we'll have this kind of reaction. But again, watch out for 45K, because the year is not going to close below 45K. I'm almost too sure about that. So regardless of what price plays out to be today, the year is likely not going to close above this blue zone. I mean, close below this blue zone that I've shown you guys. So that's that in terms of the price of Bitcoin. So naturally speaking, among other things I've mentioned, that there's so much liquidity in January. People will try to front run the Fed tapering of March. So if you remember what I talked about the FOMC minutes and the meeting when they said they were going to start tapering in first quarter of end of first quarter of 2022. The stock market and institutional investors will try to use the first few months to cash in before that tapering happens, because when that tapering happens, guaranteed there will be market shock. Well, if it happens, there will be some market shock. So the best way, thinking like an institutional investor, will be to position early in January, probably cash out in February, or even wait to pump the market to beginning of March and then exit the market. So naturally, that's what I expect to happen. In terms of the price of Ethereum, Ethereum is basically following its big brother right now, just doing whatever Bitcoin is doing. But again, the expectation is that all that would round up once we hit the new year, because once we hit the new year, both institutions and mega traders are angling to take positions for the year. So swing traders, long-term institutional traders that are looking for the yearly open and the yearly close, make their investment decisions. It's obvious. If you're looking at the charts, it's obvious that everything is lining up for a massive run-up in the new year. Another interesting parallel I just saw looking at the chart as I speak to you right now, actually, is hold on a second. I was just looking at this. I drew this line back in September, noting that the price was breaching a key level, which was around 3,600 back in October. It tested this level for a long period before finally breaking through. And it tested it again after the original correction in April, May. What we are seeing now is a giant retest, as it were, of that price breakthrough. So again, that explains why the price of Ethereum is stalling at around 3,005. Mark my words, 3,005 is the floor for next year's price of Ethereum to never come back to 3,005. If it comes back, it's going to bounce off 3,005. So what does that mean? In essence, what it means is, give me a second. What it means based on this idea is that we can expect Ethereum to very easily, because it's going to get to 6,000 very, very easily. It's going to get to 6,000 probably in the first quarter or less. So that's the minimum we can expect Ethereum to do in the near term. So that's that in terms of technical analysis. The only crypto tip I wanted to share was what I had cooking, and that's the crypto bootcamp. It's going to start with London, because I'm currently in London. We have plans for an Africa Crypto Summit sometimes in 2022 in Lagos as the premier event. But of course, we're starting this in London, and it's going to be a media event and also a physical event. So it's going to happen to set up for the year being shared. There'll be a lot of knowledge, both for newbies and people who are already into crypto. There will be a lot of time for consulting. Of course, there will be VIP tickets. The event is largely free, people attending physically, but there'll be VIP ticket that comes with a number of privileges. And for those who are subscribers to the better things, very important day. So we'll have one in London. Q2, we're going to Manchester. Q3 will probably be Liverpool. Q4 will be either Birmingham or Scotland. I've not made up my dates. But we're going to have these bootcamp sections where we're going to help people understand what's this is all about, and actually position depending on where you are, either as a professional, as a self-employed person, or even as a student. So that's oh, my voice is fading. Sorry, I need to drink. Apologies for that. So that's what we have in stock for January. It will be for the media part of the event. You need to pay a token just to join the media event, but I will keep you posted on the developments as time goes by. I'll come up with further details in the coming week. But if you happen to be in London around the 22nd of January, I think it would be very nice to come around because it's going to be a very helpful session. And I have some very key insights, critical insights to share about 2022. Oh, okay. I'll revisit. Okay, so people said they can't hear what I just said about it. Yes. What I'm saying is that we're starting 2022 with this bootcamp, which is the first, which is in London. The second will be in Manchester. The third in Liverpool. The fourth, I've not made up my mind whether to go up north or to go down south. So I have three. Actually, have three locations in mind. I have actually four. I have Birmingham, Scotland. I mean, by Scotland, I mean Edinburgh or Aberdeen, Southampton or Brighton. So I'm working on the logistics for any of these ones that comes through first. The one we'll go with for the Q4. Well, in each quarter, I'll be in each of these cities, spreading the gospel of crypto. Okay, that's all I have. If there are any questions, please. From next year, from January the first. I'm not having any coin spotlight today. I do have some coins in mind, but no spotlighting today. Just to allow everybody to enjoy their New Year celebrations and prepare for the new year in terms. Yeah, apologies for the disconnection. I don't know what happened. I think it's probably my internet or Zoom itself that is acting up. It's either of the two. So that's all I have for today. If you have any question on the call, please just unmute your mic and ask your question. If you have a question on Instagram, type in your question. I'll read it out and I'll answer them. Please, let's make it snappy. I'm already 5 minutes over time. Thank you.
Good evening, Doc. Doc, good evening. Hello, can you hear me? Oh.
Go ahead, please.
I don't know how trading volume of crypto.com is like. We those in Ghana, we don't have access to crypto.com. Though you have touched on crypto.com crew before, but I just you want to touch on it again briefly. How possible it can do, like their crew can do can perform like BNB in future. Thank you.
Well, I think I talked about Crow two or 3 weeks ago, and what I was my thesis on CRO at the point was that CRO is gearing up to position itself like BNB. And what I meant was that one, they had created the mainnet, and two, they have started creating, or well, they have started partnering with companies and other projects that are utilizing their mainnet. So CRO Kronos mainnet, which projects like VVS, very, very simple finance. That's a DeFi project that allows you to interact with the CRO net, allows you to stake, allows you to trade, allows you to earn. So VVS actually, I have it somewhere. So I expect that as we get into the new year and there is the DeFi hype, DeFi cycle comes up. Yeah, I lost the connection because I was trying to connect yes or but if you go to VVS, I think it's VVS, you can see what I'm talking about. VVS of finance, sorry. VVS of finance slash swap. You can see that with that particular DeFi platform, you can interact with the CRO blockchain. And I mean, you can do essentially whatever you want to do, just like your Uniswap. So because CRO is already very well positioned in the public, and I mean, this is not just sitting in the crypto domain, they're already very well positioned, generally speaking, in the public. Remember, they bought the naming right for Staples Center in Los Angeles. They've been sponsoring every major sporting event throughout the year. So when they do start to push the CRO mainnet, it's going to be huge, not just for CRO itself, but for all the projects that are connected to the CRO mainnet. So in short, the question you're asking me is, should you stack CRO? Yes, you should stack CRO. I will give some other nuggets on what to stack.
Thank you. We shall stack it very, very well.
I'll give some other nuggets on what to stack in the boot camp on January 2022. But there are a few of them I have my eyes on, justifiably so, that I think are going to be mind-blowingly explosive in 2022 and beyond. Actually, not just 2022, because they are very powerful projects and they have a lot of deep pockets. That's what I'll say. If there are no other questions, I'm happy to give you back your time. Wish everybody Happy New Year and prosperous 2022 in advance. We will see you again in 2022.
Thank you very much. I have a question, a quick one.
Okay, sorry. Go ahead.
I will be asking a backward question, please. NFTs. What I know, I have an idea what it is, but how does it work? How do we go into it? I don't know. What can you tell me about NFTs, as in how we can take use of the opportunity to do something?
So that one,
NFTs.
There was no broadcast last week.
Non-fungible tokens.
Yeah. If you watch the YouTube for 2 weeks ago, and I think the one before, I did talk about non-fungible tokens. So you can. I'm not going to talk about them today because I've spoken extensively.
Trust me, I'm even on my way out of my house. For us, it's still very bright. Yeah. about those ones.
It's basically like digital works of art or digital collectibles. Let me use that word. So the same way people collect fancy wristwatches, cars, uh, exotic arts. So NFTs are like that. But that's just one application of NFTs, just to be clear. There is a bigger application of NFTs that is going to come into the mainstream in terms of technology, pure technological application. And that's things like identity. Because NFTs ensure uniqueness. So if you produce an NFT of a particular picture of myself,
Yeah.
and assign it to a signature on the blockchain, no two of such signatures can exist on the blockchain. So it's
Yeah.
unique forever.
Let me know
So,
keep that on the line. I would ask you more about it. And I would just want to say, how can I tap into the market? That's pretty much what I was asking.
okay. I promised that 2 weeks ago that I was going to have a course on NFTs. When I'm done, I'll let you know.
Okay, sure. Okay, sure.
Yeah.
Then let me know. Thank you.
Dr. Laluri.
I'm actually. What
I
do
don't
you
have
want?
any question. Thank you very much.
All right, so
Thank you.
happy New Year. Paul, you have a question?
Yes, I do, Doc.
Yeah.
I once watched a presentation on YouTube and they were saying that it's possible the bear markets will not be en bloc like it used to be. Maybe the metaverse category will have theirs, and it's likely the major cryptos will also have theirs. Have you ever maybe come across any literature like that?
Well, I've spoken about this for many times actually this year, especially in the second half of the year. And what I said was,
maybe I was absent then. Sorry.
yeah, it's possible you were absent. And what I was saying was that there's a parallel philosophy in the market that might not have the 4-year cycle we're used is purely defined by Bitcoin halving. And there are a lot of for this current cycle, we did not have the kind of institutional involvement that we newer products and innovations that have, for lack of a better word, almost outshone Bitcoin. The price of Bitcoin is not doing anything. The other, altcoins and the other categories of altcoins like NFT, metaverse can probably still be pumping on this own innovation. However, one thing is certain that we're still going to have that blow off top in which the price of Bitcoin will go very high because other than that, there's no way for the whales to cash out of the markets because they have large positions. And for them to be able to successfully cash out of the markets, they need to be far away, very far away from the entry points to successfully cash out. So yes, there's a possibility that we don't have the 3-year or 2.5-year bear market that we used to have before. That is probably just, a sinusoid in which there's 6 months bear market, then the prices pump for 3 months, then goes back to the original level it was, then goes up again. But cumulatively, I think that we're going to see a price gain for the next 5 years. So the other categories will always have that. I mean, if you study the altcoin cycle, you discover that almost every quarter there's an altcoin bump. Like there's a pump in price of altcoins, then it comes down again. So naturally speaking, I expect that to happen even through the bear market. So because the bear market is really about the price of it. So I expect that to happen throughout the year and throughout the next 1 to 3, 2022, 2023, and up to 2024, when you have the next halving. So other categories, even during bear market, actually, I think the most money is that's where many of the alts are, at ridiculous discounts. And then by the time they come back to the bull market, it just become very price. So yes, definitely all those categories will perform relatively well during the bear. And we might not have the 4-year cycle used to. Okay. So have a lovely evening, everyone. Happy New Year, everyone. Instagram, have a fulfilled and wonderful 2022. Thank you very much.
Thank you very